In this video, we're going to talk about the 529 College Savings Plan investment mistakes, and of course, how to choose the right plan for you. If this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name is Travis Sickle, Certified Financial Planner with Sickle Hunter Financial Advisors. So yesterday I was reading an article written by Morningstar that gave the Florida 529 College Savings Plan a poor rating. And I just wanted to figure out why. Why did they get such a poor rating and some of these other plans did pretty well, considering that the prepaid plan is well funded and one of about 10 or 11 plans still remaining in the country. So I wanted to see what was up with their savings plan. So I was looking at their website and trying to figure out the investments. And I quickly realized that there's not much information on the actual investments on the Florida 529 savings plan. So I gave them a call and I said, I see that there's performance reports and fund names, but no ticker symbols and no real information about the funds. So they didn't have anything for me. In fact, I asked for a manager to call me back because the person I was speaking to passed me around 3 or 4 times. And then they just kind of gave up at finding the answer for me. So the answer that I did receive was write a letter to the Board of Trustees for the Florida 529 plan. So I haven't done that yet, but that makes no sense. Why isn't this information on their website? I don't know. So I started comparing the other plans in the rest of the country. So the Florida 529 plan to other plans in the country. And if you didn't know that you can use other 529 plans, you can. So if you're not from Florida, you can still watch this video. You don't have to go to the next video just because you're not from Florida. So I was looking at these plans and looking at the performance, and that's basically all that you get from the Florida 529 savings plan, which I think is a huge mistake. And I'm gonna show you exactly why that is. Now, you can find the investments and you can find the investment managers, but you don't really know how they're investing those dollars when you're putting money into those particular funds. Now, some of the other plans in the country were a lot easier to figure out. Not all of them, but the ones that I was looking at made it a little bit easier to kind of figure out the investments. So here we go. So I'm gonna bring this up. This is my example. I'm gonna hold this board today. We're gonna see how this works out. So I have 3 funds here. None of them they're fictitious funds, so don't try and go look at them up. We have fund A, B, and C. So this is usually our quick snapshot of what you're looking at when you look at these 529 plans, or really any plan, whether it's a 401k or a retirement plan or any sort of investment plan where you're provided the plan. This is one of the first things that you'll see, and it's the performance. So if we look at fund A, B, and C, and don't get me wrong, performance is important. You just want to make sure that it's the right way that you're looking at it. So we have the 3-year, the 5-year, and since inception. So when was the fund created? So fund A, B, and C. So fund A did 13.79%, compounded annually over a 3-year period. Fund B, a little bit less. Fund C, a little bit better over that 3-year time frame. You could see the 5 years for fund A, B, and C. So 17.33, again, a little bit less. And the winner over here for the fund C in the 5-year. And then since inception, quickly it jumps out to you that the 14.94% is fund B. But there's a few things that aren't apparent when you first look at it. So let's go ahead and circle the winners in each one of these categories to kind of highlight this. So for the 3 years, we want to pick the winner here. So we're going to take a look at fund C. So I'm just going to circle it for you. In the 5-year category, the same thing. We have fund C. But then when we look at to inception, the longest time frame, fund B is the clear winner by a long shot. 4% since inception, that's quite a bit. So I want you to write down or take a mental note for a second on funds A, B, and C. And I'm gonna point this out too, if you haven't read it up here. Large cap funds, they're all in the same asset class or what you'd call the same category. So apples to apples, they're all large cap funds. I want you to choose A, B, or C. You can only choose one at this point. I want you to take a second, take a mental note. You got it? Okay. So fund A, B, and C. Now this isn't all the information. So clearly, if you're looking at it over the long haul, I want the winner over the long haul. Now maybe you picked fund C because you liked it because 2 of the categories for the 3 and the 5 year. I don't know. Whatever it is, it's perfectly fine. You cannot make an intelligent decision just based on this information. So the other things that you want to take a look at are the costs. That's a big one. Everyone's always talking about, I want the lowest cost provider. I don't want to pay fees. That's all I want. I want whatever's the lowest cost. So you don't hear cheap because cheap is synonymous with junk. Well, that doesn't necessarily mean it's junk, but you get the point. So let's take that up. Let's uncover the fees column. So the fees column is right here. So I'm gonna make sure we could see that. So Fund A has no fee. Fund B has a little bit of a cost at less than 1%. It's actually a tenth of 1%. So it's 10 basis points. So then you have Fund C, and we have a high fee. I wanted to put a high fee one in there, of course. So I have it at 1.25%, okay? So these are the fees of these funds, all right? The expense ratios that you would see. Now, these rates of return, they are net of fees. So these fees are incorporated into these funds or this performance chart right here. But I want you now to think which fund. Does this change your thought process for which fund you're going to choose, okay? Take a second, take a mental note. Does it change? I don't know. Okay, let's take that, all right? So let's take a mental note of the fees, okay? So let's look at the third option, okay? The third one is looking at the inception date. And I find this extremely misleading, especially if you're looking at these things and you didn't know what the inception date was. You're just figuring, okay, it's long term. And everything looks apples to apples. Everything lines up in this column, So of course, this should be the same, right? Well, not necessarily. Let me uncover that one. The inception date, which is this date right here, was when the fund was created. So funds A and C were created in 2007. Fund B in 2009. So why did I choose these dates for these fictitious funds that I created? So I chose these dates because they were right before 2008, right before the recession. And this is right when the market started to pick up in 2009. Here's what the difference in these funds are, and here's why it's super misleading. If you look at funds A and B, funds A and B are invested exactly the same way. But this one started a year after the recession. This one started right before the recession. So that's why there's such little difference between these two rates of return. In fact, it's just the fee, because 3 and 5 years was after 2009. So it's apples to apples. So that's why we have such a close rate of return right here. Now we jump to the inception date, and with Fund B, we totally missed the recession. So that's why this number is so much higher. So you're actually not better off with this fund than this fund, because they're exactly the same. You're just calculating the inception date with more years, and unfortunately, those were down years. Doesn't make the fund better. Fund C, that one's a little different. So Fund C had the same inception date as Fund A, but the difference here is it consistently got a better rate of return of 2%. So I put it at 2% better every single year. So the 3-year, here's where it were, 14.35%, 5 years, 17.85%. And then since the inception of 2007, even with this fee, it was 10.83%. So you're really comparing 10.18% now to 10.83%. But you can't figure that out. You wouldn't know the difference in that unless you looked at the actual date. Now, sometimes the inception dates are printed and sometimes they just show the column of since inception. So you need to make sure that you're comparing apples to apples when you're looking at that, especially with the inception date and the fees. So these funds are usually printed with net of fees, which is perfectly fine. That makes it a little bit easier to analyze. You also want to make sure that when you're looking at one plan that shows the 3 and the 5 years, and then you flip to another state's plan and you look at the 3 and the 5 years, make sure they're actually the same month. Because even for 2019, even year to date, the market has done pretty well. So if you're off by a month or two, it could be significant. Now, there are other 529 plans that I will do on future videos, but if you have comments, questions about 529 plans or anything financial planning related, go ahead and put them in the description at the bottom, or go ahead and put them in the comments at the bottom. And if you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.